Right now, as you're listening to this, something strange is happening in the global financial system. A metal that most people stopped paying attention to years ago is suddenly making headlines again. Silver prices are jumping across the US, China, and Europe at the same time. Physical silver is getting harder to find. Major mints are quietly slowing or halting orders. And behind the scenes, some of the biggest players in the world are scrambling. This isn't hype. This isn't a rumor. This is real. And the uncomfortable question nobody wants to ask out loud is this: are we watching the final setup before silver either crashes hard or explodes into something we've never seen before? Before we go any further, do me a quick favor. If you like calm, simple explanations about money, markets, and what's really happening behind the headlines, gently tap the like button and subscribe. It helps this channel reach more people who just want things explained clearly, without noise or fear, and it lets me keep making videos like this for you. Now let's slow down, take a breath, and break this story apart in a way that actually makes sense. Because the silver market isn't just about price charts or traders yelling on TV. It's a story about shortages, trust, power, and what happens when the system gets stretched too far. And by the end of this video, you'll understand why so many people are suddenly paying attention to silver again, and why this moment feels different from all the times before. For decades, silver lived in gold's shadow. Gold was the serious metal. Gold was what central banks talked about. Silver was treated like the little brother, something used for jewelry, coins, and industrial parts, but never taken seriously as a monetary asset. And that neglect is exactly what makes today's move so important. Silver didn't slowly climb back into the spotlight. It snapped. Almost overnight, prices jumped across multiple markets at once, which is rare and dangerous, because it means this isn't just one country buying or one group speculating. It means pressure is coming from everywhere. To understand why silver is suddenly surging, we have to start with supply, because silver has a quiet problem that most people don't realize. Unlike gold, most silver isn't mined just for silver. It's a byproduct. It comes out of the ground while companies are mining for copper, lead, or zinc. That means silver production doesn't respond quickly to higher prices. Even if silver doubles tomorrow, mines can't just flip a switch and produce more. And over the last few years, mining investments slowed down, costs went up. Energy prices rose, environmental rules tightened, so supply quietly fell behind demand. At the same time, demand didn't just rise. It changed. Silver is no longer just a shiny metal people collect. It's now a critical industrial material. Solar panels use silver, electric vehicles use silver. Data centers, medical devices, electronics, and defense systems all rely on silver's unique properties. And unlike gold, silver gets used up. It gets scattered, lost, and recycled inefficiently. Once it's gone, it's gone. So every year industrial demand eats into available supply, and there's less left over for investors. Now add global politics to that mix. The US, China, and Europe are all racing to secure critical resources. They don't want to depend on each other. They want control. That means stockpiling. That means long-term contracts. That means pulling physical silver out of the open market and locking it away. When that happens, the paper price you see on a screen starts to drift away from reality, because the real market isn't about contracts anymore. It's about who can actually get delivery. And this is where things get uncomfortable. For years, silver has been one of the most heavily manipulated markets in the world. Not conspiracy theory manipulation, but documented, admitted manipulation. Massive banks have paid penalties for suppressing silver prices through paper contracts. The idea was simple: keep silver cheap, keep it boring, keep people uninterested, because a rising silver price sends a signal. It says inflation is real. It says trust is breaking. It says paper promises might not be enough. But manipulation only works as long as physical supply is abundant. Once physical silver gets tight, paper games stop working. You can sell unlimited contracts, but you can't deliver unlimited metal. And lately, cracks have started to show. Premiums on physical silver have jumped. Coins and bars are selling out faster than usual. Dealers are warning of delays. Mints are slowing production. These aren't things that happen in a calm, balanced market. These are stress signals. China plays a huge role here. Over the last decade, China quietly increased its influence over industrial metals. It produces, refines, and consumes massive amounts of silver. When China starts buying more aggressively, it doesn't announce it loudly, just absorbs supply. And when the US sees that, it reacts. Not publicly, but through policy, incentives, and quiet accumulation. This creates a global tug-of-war, where nobody wants to be the last one holding paper claims instead of real metal. At the same time, regular people are waking up. Inflation may not feel like a headline anymore, but it's still there. Prices are higher, savings don't stretch as far. Trust in institutions is weaker than it used to be. When people lose confidence in the future, they look for things that feel real. Silver is small enough to feel accessible, but historic enough to feel safe. That combination is powerful, especially during uncertain times. But here's where the story gets dangerous, and where the question of a crash versus a breakout comes in. Silver is famous for volatility. It doesn't move gently. It surges, then collapses. It punishes late buyers. It rewards patience, and it destroys impatience. Every time silver runs up, memories of past crashes come back. People remember buying near the top and watching prices fall for years. That fear keeps many investors on the sidelines even now. So is this surge different? Possibly. And the reason is structure? In the past, silver spikes were often driven by speculation alone. Traders piled in, prices ran, and then demand vanished. This time, demand isn't just emotional, it's industrial. It's geopolitical. It's structural. Solar panels don't stop being built because prices dip. Data centers don't pause because sentiment changes. That creates a floor under demand that didn't exist before. But that doesn't mean silver can't crash. If global growth slows sharply, industrial demand could soften. If central banks tighten financial conditions aggressively, speculative money could flee. If fear turns into panic, prices could overshoot and then snap back hard. Silver doesn't move in straight lines. It never has. The real question isn't whether volatility is coming. It's whether the long-term balance has shifted enough to change where silver settles after the dust clears. This is why so many analysts are using the phrase final setup. Not because silver is guaranteed to moon tomorrow, but because the pieces are in place for a defining moment. Either the system absorbs this pressure and silver retreats again into obscurity, or the pressure breaks something and silver reprices higher in a way that sticks. And if that happens, it won't be quiet. It won't be gradual. It will be chaotic, emotional, and confusing, just like every major shift in financial history. This is also why channels like Money Explained simply exist, because most people don't need hype. They need context. They need calm explanations that help them think clearly, instead of reacting emotionally. Silver isn't about getting rich overnight. It's about understanding risk, scarcity, and how trust moves through the system. As we move closer to the end of this story, here's the most important thing to remember. Silver doesn't explode because people want it to. It explodes when people need it, and trust in paper weakens, when supply can't keep up, and too many claims chase too little metal. That's when price stops being a suggestion and starts being a signal. We may be approaching that moment, or we may be watching another dramatic chapter that fades. No one can promise which outcome comes next. But the fact that silver is forcing this conversation again across the world, all at once, tells us something important. The system is under stress, and stressed systems reveal truths they usually hide. If you found this breakdown helpful, let me know what you think. Do you see this silver move as the beginning of something big, or just another temporary surge? Share your thoughts in the comments, because these conversations matter more when we have them together. And if you think someone else would benefit from a calm, simple explanation like this, share the video with them. Sometimes clarity is more valuable than certainty. No matter what happens next, stay curious, stay grounded. And remember that understanding the story behind the price is always more powerful than chasing the price itself.